YieldMax just released 2 new ETFs. These are literally in their infancy, and I normally wouldn't consider making a full video on 2 ETFs with zero history because, well, there's usually not much to talk about this early on, but YieldMax ETFs have the potential to draw a lot of investor attention, and there's been some serious fireworks in the overall markets recently. Some of the YieldMax ETF yields were already insane, and things are getting much more exciting. So with more price action comes potential for higher returns, and people can get caught up in the excitement. There are major pitfalls to this price action in the markets and with these 2 ETFs specifically. So if you don't know what you're getting into, you could get chopped up. So we'll go over what these ETFs are, who they're suited for. I'll give you some more high-level information that a lot of investors seem to be conveniently ignoring right now, and I'll tell you what I'm doing with this information. Of course, remember, this isn't financial advice. I'm just some guy on the internet. Let's get into it. The first new ETF is YMAX, or the YieldMax Universe Fund of Option Income ETFs. So if you're waiting for the YieldMax Fund of Funds, so to speak, this is it, available now on your smartphone. Obviously, because it's so new, the distribution yield is non-existent, and it has a gross expense ratio of 1.28%. For context, the individual YieldMax ETFs have a fee of 0.99%. The purpose of the fund is to generate income and invest into the shares of other ETFs, obviously other YieldMax ETFs. So there's some language here, probably for legal purposes, that doesn't lock them into any firm and rigid holdings. I consider that a good thing because it allows for the fund managers to pivot strategy if needed, but the best place to really see what's going on is to just directly look at the holdings. Of the 19 total holdings, one of them is a cash position, the other 18 are all the other YieldMax funds, equally weighted at roughly 5% of the overall holdings. So with this initial data, we can make some assumptions on future performance. Of course, I have no idea what's actually going to happen, but I would assume this fund is going to perform as an average of all the other YieldMax funds. Shocking, I know. So who is this fund for? My personal opinion is that this fund is for individuals that want to try out the YieldMax strategy using synthetic covered calls to generate income, but don't want to take all the risk with one individual ETF that is based on one single volatile stock and don't want to manage 18 separate holdings. This is a diversification play in my book. The downside, of course, is that performance is going to be weighted down by underperformers of the YieldMax funds. If there's 18 individual ETFs, one of them will outperform the other 17. Someone has to win the race. Of course, this depends on a lot of factors, so if you're not interested in picking winners, this might be a more favorable investment option, although I do believe synthetic covered call ETFs are not suited for everyone in general. The next ETF is YMAG, or the YieldMax Magnificent 7 Fund of Option Income ETFs. So similar to YMAX, this is a fund of funds, but YMAG is based on the Magnificent 7, otherwise known as Apple, Amazon, Alphabet, Meta, Microsoft, Nvidia, and Tesla. Conveniently enough, YieldMax has income ETFs for all of those already, and they bundled them into one product. Quick review of the holdings: it looks like of the 8 holdings, one of them is a cash position, and the other 7 are equally weighted holdings of the Magnificent 7 YieldMax ETFs. So who is this for? Investors looking to get into YieldMax funds, try the strategy, but want to concentrate their holdings into the Magnificent 7 stocks, more specifically the YieldMax ETFs. So if you're looking to diversify or concentrate your YieldMax position, there's an option for you, no pun intended. However, before we go throw our life savings into a shiny new investment, I do want to warn you that the markets are breaking into all-time highs. Even Bitcoin is getting in on the action. And of course, as most people who have been in the markets for a while now know, the markets do not stay at the highs. There's usually some sell-off eventually. And to make matters even more concerning, the Magnificent 7 is reportedly a huge chunk of the overall market value and responsible for a good chunk of the actual returns. I'm sure you've heard of the phrase, the bigger they are, the harder they fall. Now, long term, I am bullish, which means that in 30 years, I do think the markets will be higher than what they're trading at today, assuming everything goes according to plan. However, if a market downturn is right around the corner, the YieldMax funds, including YMAX and YMAG, will capture the downside. For me, I have a small position in Coney and Tesla and will continue to reinvest the dividends in hopes that eventually I can accumulate enough shares to cover my initial investment and be able to take profits from the option strategy in full every month, and I'm prepared for more downside with the understanding that it would take me longer to recoup my investment. And if markets go ripping to the upside, well, we're all making money and we'll start talking about buying Lambos and Wall Street bets. Either way, I'm ready. So that's just me. Let me know your plans and your thoughts on YMAX and YMAG in the comment section down below. Thanks for watching, and of course, good luck in the markets.